If you think about why we managed to get out of it so well, it's twofold. One, we drag people back into debt locally with what I prefer to call the first-home vendors boost, but also we benefited from China doing its massive stimulus. Now, if you look at where China has been an incredibly successful case of very intelligent industrialization at the expense of the West, they opened up their export processing zones like Shenzhen and stuff like that, deliberately to encourage American capital to move offshore, take advantage of elements of the American tariff system, and export back to America, getting the developing country tariff reductions. So they got lower wages, they got tariff reductions in terms of their reporting costs, and they had lower capital costs as well because they were building a virgin field where there were no environmental requirements to worry about, no local lobbying groups, no planning laws, etc., etc. So they got the American corporation got an enormous benefit out of that, but so did China. They made sure they got ownership of a large part of that capital coming in. So they've generated this capital class. Now, that was funded largely by the growth in American debt, because you were deindustrializing America in the process, taking spending power out of the American public, particularly the working class and the middle class in America. And they were substituting that income-based spending power with rising debt-based spending power driven by the stock market bubbles, which would go right back to 83, 85, through the 87 crash and then after that, and also out of the land bubbles. So you had this, effectively China industrialized by transferring American industrial might to itself, taking over ownership through very intelligent laws to make sure that China benefited from that, whereas many developing countries didn't get any benefit at all, and then exporting back into an American bubble. Now that bubble came to an end in 2007, 2008, and the Chinese response effectively was to start their own bubble. I'm not an expert on China, I'm not going to push this line too hard, but the scale of expansion of demand in China to make up for the collapse in demand from America was largely credit driven and largely has gone into real estate speculation by the looks of things. Grand scale stuff, you'll find better stuff from other people than you will from me because I don't focus on China if you look through the web, but you'll find this, cities with no people in them where all the properties have been sold for profit and so on. So there's a bubble of sorts in China, and that really, we sold into that because that's a construction bubble. Now we're doing Australia sells to China. So we are not quite so dependent upon the Americans, but we are now dependent on two sources, both of which may be bubble driven. China's bubble itself, which is a new phenomenon, and the American situation where they're trying to reflate the bubble. And I think what they're going to find is they reflate and they start to fail. That will feed back through to Chinese sales to some extent, and that will feed back to Australia in that indirect channel, and it also hits us in terms of our exports to America.